Big tech gets a lift, courtesy of the Fed. Welcome to Market Insight, I'm David Pollard. The first US rate cut in 4 years is working its spell on megacap growth stocks, with Microsoft, Meta and Alphabet all advancing in the wake of Wednesday's FOMC. Nvidia, AMD and other chip stocks were also seeing solid gains. So for how long and how deep can the feel-good factor last? Well, Melissa Otto joins me now. She's head of TMT Research at S&P Global Visible Alpha. Melissa, welcome. Let's talk about the Fed itself first. What do you make of Wednesday's decision? What's the likely policy path from here?
Well, 50 basis points was significant, and we certainly have seen that now in the somewhat delayed response by the market. This is exciting news. It'll be interesting to see how the rest of the year shakes out and what the actual path will look like.
So megacaps are buoyant in the wake of the Fed move. How durable will the impact be from an easing cycle, and who are likely to be the biggest winners?
Right. So I think one of the critical things we're looking at is to see how the path of rate cuts may impact the dollar and what impact that will have on asset allocation. That may create some volatility for the market here in the US as some of our non-US investors in EMEA and APAC regions may look to bring take some profits in the US and bring them back home. But that's not really clear. We've seen some strengthening in the dollar over the past few weeks, but the initial reaction to the 50 basis point cut hasn't really seemed like it's been very impactful in the FX markets.
So is there any sense of who might be the big winners from any possible moves we might see?
Yeah, looking forward, this earnings season is going to be a big one for the mega cap tech stocks because it will orient the market toward next year and how we need to be thinking about the trends around AI and what the next product cycle may look like. In particular, we're seeing expectations moving around quite a bit. For example, Apple had its big event on September 9th, and we have seen iPhone estimates moving back a little bit for Q4 and coming down for next fiscal year.
So the same question for smaller cap stocks. What do you see the impact being there, and is the possibility of good news?
Yes, small cap stocks have not performed very well in this rising rate environment. It's been a tough market for that asset class. However, with a path of rate cuts coming into the mix, this particular category may be more appealing as valuations have come down and this class has been out of favor for a while. So it may be time for this particular asset class for us to take a second look there.
So you mentioned Apple there and investors dialing back expectations. Did Apple fail to impress with the launch earlier this month of its iPhone 16? And if so, is that simply down to a certain lag in pushing through some AI features?
Yeah, I think it was a little bit underwhelming. The market probably was expecting a little more wow factor. And I think we're also trying to get our head around how Apple Intelligence may be a catalyst to incentivize users to upgrade their phones to next gen phones. And how is Apple Intelligence going to make people's lives more engaging, more interesting, more productive, efficient? Those questions still have not really been addressed yet. However, it probably is coming into the pipeline, but I think we really need to see it to believe it.
Well, and turning to one of today's big tech stories, Apple is coming under increasing pressure from EU antitrust regulators to open up its ecosystems to rivals. There could be a hefty fine if it doesn't comply. And of course, Apple is fresh from losing a $14 billion tax battle with the EU. What do you make of all this?
Hard to say. And overall, I would say we tend to focus on the fundamentals of the company and what's really impacting their business and the business segments. So, and traditionally, I have to admit that markets are not very good at pricing in the more nebulous regulatory risks. So I think, we're just kind of waiting and watching and to see if the company addresses this in their earnings call and in their outlook.
So 3 and a bit months to go before year end. They could be tumultuous ones, possibly for big tech stocks, couldn't they? Given some of the factors we've discussed. Plus, of course, a US election next month.
Absolutely, buckle up. I mean, mega cap tech is never boring, and then you throw on top of that an election in the US. It's going to be an interesting ride. So I encourage everybody to fasten their seatbelts and get on board.
Okay, thank you very much, Melissa Otto from S&P Global Visible Alpha. That is Market Insight. You can watch more videos on Reuters.com.